Bitcoin just got sent down back to 89K and just entered the bear flag that could take us down to 70K again. Is this the end for Bitcoin, or is there still a possibility for more upside? Let's find out. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now it's about 3:50 p.m. Eastern time, and the price of Bitcoin is currently at 89,740. And before I go over the top-down analysis, I want to go over this winning trade I gave you guys yesterday on the 15-minute chart. I showed you guys that we were creating a bear flag here with the measure move taking us to about 89,700. Not only did we hit the exact measure move, but we went down as low as 89,400. So congratulations on whoever took that trade. This is a big win for the Flex Candle community. Now, starting off here with the weekly chart, this candle closes in the next 5 hours and 4 days, and unfortunately we have lost the 80 moving average. I was telling you guys, even though we closed above the 80 moving average and that was good, I did not like this wick. This is a rejection wick here, even though we had a green candle. And right now with this red candle, it looks like we want to go and test this 100 moving average at 87,284. The stochastics kind of look like they want to roll over. And I was noticing over here, these stochastics over here went sideways, and this was all the way pretty much from May 2024 to September 2024. And right now this started in September of 2025. Could it be that we run into May of 2026 now before we start going up? The possibility. This has been dragging here for a while. The RSI is also rolling over. You guys know I have this in a bear flag, and as you can see, we entered the bear flag again. We just got to the bottom of the bear flag, and if this breaks down, unfortunately we might be seeing below 70k prices. We would have to see how this candle closes. It's not over yet. We still have 5 days and 4 hours. Maybe it turns green, and maybe we just go sideways, and then we finally go and test that 50 moving average. We take a look at the other time frames. The 6-day chart, the stochastics still look like they want to go up. We're halfway there, but it's also possible that we roll over here. We roll over, not looking good, because we'll start to lose this 100 moving average, and then the next line of defense is going to be this 200 moving average. That's going to be at 63,000. On the 4-day chart, stochastics are toppy. We just lost the 21 moving average. This candle closes today in 3 hours and 8 minutes. If this closes like this is possibly going to be tweezer tops, and we all know after tweezer tops we actually start to have more downside, and that's it. There's no more line of defense. Once we break through this 21 moving average, the next thing is going to be this 200 moving average back to $81,706. Now what can save us here is a 3-day chart. This closes in 1 day and 4 hours. We currently lost the 21 and the 200 moving average. Now this candle closes, like I said, in a few days. If we could close above the 200 moving average, we have a shot. Maybe this could be some type of an inverted head and shoulder, left shoulder head. Maybe we're making the right shoulder now. The only thing is that the stochastics RSI are toppy, and it looks like we want to roll over. If we lose and confirm this 200 moving average loss here, fortunately I do think we will be having some more downside. 2-day chart, this looks horrible here. This is like a triple top on the stochastics RSI. The RSI is pointing down. We got rejected hard off that 50 moving average, and it looks like we want to lose this 21 moving average. Again, this candle closes in about 3 hours. It'll be very important to see how we close. Can we close above the 21 moving average? If so, we have a chance. If not, possible more downside. On the daily chart, the stochastics are still on the way down. This could take a couple days to reset. This could take us into next week, depending on how long this wants to go sideways and drag here on the bottom. And unfortunately, we lost the 21 and we're about to lose the 50 moving average. This is not looking good. This is where I originally do have the bear flag, and I was telling you guys, if we lose that 21 moving average and we get back in here, we're in danger now of this bear flag playing out. We could definitely go here up and down sideways, but as long as we stay in this bear flag, the probability of it playing out is going to be higher. We need to get back above this 80 moving average and possibly even above this 100 moving average at 95k now in order to have a shot. Now, I predicted to you guys since December that in January it looked like we wanted to go from 97k to about 100k, and that prediction did come true. We hit about 98k. We were still expecting to see if we could hit 100k. Sometimes things don't hit exactly where we think, but the prediction was right, and ever since then we did start rolling over. So it's possible now that this bear flag could play out. Now, on the 22-hour chart, stochastics are getting ready to reset here. Maybe we could have a short-term bounce. Maybe this could bounce back up and test the 21 moving average. That's at 93,000 since 629. What sucks now is that we had 94k resistance for a long time. Every time we got to 94k, we got rejected, and we finally broke it. We made it to about 98k, and now we're back at 89k. We're below 94k again, which is going to be heavy resistance. And unless we could close, I would say a daily candle above 94, 95k is not going to look good. I'm also seeing that even if we have a turn up here and we come back up, this could end up being some type of a head and shoulder, left shoulder head. You know, the stochastics reset, we make it back up. If we can't break above this head, like I said, above this 100 moving average, we could easily make a right shoulder here, and this could break us down to about 84, 85k, even 83k. Now on the other time frames, the 8-hour chart, stochastics are dragging here on the floor. We could still dip down more. We're losing the 200 moving average. This candle closes in 3 hours. This is going to be very important, because if we lose this 200 moving average, there could definitely be more downside. On the 4-hour, I had a beautiful falling wedge here that ended up getting negated. It ended up being that descending triangle that I talked to you guys about yesterday, and I was telling you guys, if we lose the 200 moving average, I have to turn bearish. And look, we just lost the 200 moving average. Let's see, the next candle closes in 3 hours. If we close another candle below the 200 moving average, it's possible that this might be the end, and not the end forever, but for temporarily, and we might see more downside. Remember, the last time we lost the 200 moving average, we stayed below here all the way from October, and it took us all the way now to January to get above the 200 moving average. That happens again, we might be under the 200 moving average until May before we could get back up here. So it's important that we try to get back above this 200 moving average as soon as possible. Stochastics are kind of in our favor because we are low on the stochastics. Of course, this could keep on dragging, but we are also kind of far away from the 21 moving average. That's at 93,240. You guys know that either we're going to go sideways here and wait for the 21 moving average to catch up to price, or we might get a bounce up since the stochastics are low, and we might go back and test that 21 moving average. So it's possible we get a bounce back up above 90k. On the 1-hour chart, stochastics look to turn back up as well. Maybe this could end up being some type of inverted head and shoulder, left shoulder. Maybe we create the head, get to about the 50 moving average, get rejected, make the right shoulder, and maybe that's what bottoms us out of here. And on the 15-minute chart, stochastics are starting to get toppy, and we're kind of fighting to get above this 21 moving average. It's currently at 89,900. We haven't been able to get above it. If we are able to get above it, we want the 15-minute chart to reset on the stochastics RSI and make sure that we stay above this 21 moving average. If we get rejected, we might end up getting more downside. So right now, guys, overall 90k is basically going to be resistance. We're at 89k now, and now we're going to be playing a level between 85k and 90k. For us to regain strength, we honestly would have to start getting back above 94k as soon as possible, or at least get back to about 92, 93k and go sideways and work our way slow from there. But honestly, I do not expect a crazy move up back to 94k unless there's some crazy news that comes out sometime soon. Other than that, it's not looking too good at the moment. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.